All right. Looks like we all been here for a while. All right. How do you guys feel about the three types of analysis: technical analysis, sentimental analysis, and fundamental analysis? Who feels that they have a basic understanding of those three? If that's you, give me a me in the chat. Feel like you have a basic understanding. If you're completely clueless, you go ahead and put a C in the chat and we will get into it. So this is either going to be a refresher or you're going to learn something today. All right, all right, all right, all right. Sweet. All right, no problem. So we're going to start with we have technical analysis, sentimental analysis, and fundamental analysis. We will start with technical. That one is going to be the most familiar if you've been on any of the calls before, where technical analysis is all about um I don't want to say predict, but let's go with predict. Predicting future movements of the market based on past data. Now, when I pull up the chart, you're going to see all these candlesticks. If you were on the call last week, you would have seen, heard some information about candlesticks. So the information on these charts, they give us insight into what the market has done before. I want you to think of this as anytime you look at a chart, this is the currencies that we're looking at. This is their diary. So today they would say their diary. Today I increased in value. Yesterday I decreased in value. Last week I decreased in value. You know, the chart is going to give you that information. Us now, as retail traders, as traders in the foreign exchange market, we are going to be able to read these currencies' diaries and say, okay, based on what you've been doing over the last week, over the last days, over the last month, based on your pattern and your history, I believe you are going to be, it's more probable that you're going to do this. All right. And that's all we're doing. Read the diary and then predict their moves based on what they said they've done so very, very often. Because here's the deal, the market is a creature of habit, it does the same thing all the time. It's not going to look the same way, but they definitely do the same thing. If you were on the call last week or week before and you saw me talk about the ABCD pattern, just go ahead and put an ABCD on the in the chat, just so we know we got some return students. All right. Okay. All right. So awesome, awesome. So last week we would have spoke about market structure in terms of what that pattern is, what that pattern does, how that one pattern, when it repeats itself, it starts to tell us what a trend looks like. Then from identifying the trend, we know if we're going to be buying or selling. Whether we are buying or selling, we always place our trades at C. That point at C, we also know that something to the left, something in the past, is going to help us figure out where C is going to be. All right. So we're not going to go into those patterns right now, but we will advance our learning a bit, right? It's just so we're connecting all of these dots together. So I'll go ahead and open up my chart. And let's see here. Let me find a nice pair for you. What is this? Asian. So we're gonna go Great Britain pound to the Japanese yen is what we're gonna take a look at. All right. So here we are. We are looking at the Great Britain pound to the Japanese yen. And we're going to talk about technical analysis. Specifically, I'm going to be talking to you guys about patterns, right? Con continuation patterns and reversal patterns. All right. So this is the pattern that I spoke about. All right. This is a pattern that repeats itself constantly, and it's going to be labeled as such. A, B, C, D. Okay. The first set of patterns that we're going to be taking a look at based on our technical analysis are going to be continuation patterns. These are movements of price that show us that price wants to continue going in the direction that it started. So this is going to mean we are in a trend. For the sake of this conversation, we're going to look at a bullish trend. Bullish trend shows up. Remember, if you have your notes in front of you, a bullish trend shows up when you see a series of higher highs and higher lows, right? When you get higher highs and higher lows, you are in a bullish trend. And the point where we would place a buy is going to be at C. In a bullish trend, C is going to be the same thing as a higher low. Okay? So we place a buy at the higher low. Since the direction of this trend is going up, we are looking for a continuation pattern to show up in a position that will allow price to continue going up. So before I give you guys the answer, I want you to look at this chart, right? Look at this pattern. And based on this trend, where do you think, where would you believe a continuation pattern should show up? Should it show up at a higher high or a higher low? You go ahead, you type your answer in the chat. We are in a bullish trend, right? Price is increasing in value. We want to continue with the price going up. Therefore, a continuation pattern should show up where, right? I got some saying higher highs and some saying higher lows. Let's see. Let me count it up real quick. Rhea, let me know. Is it HI that you have there, or should I have been HL? Let me know. So 1, 2, 3. All right, cool. All right, we got 1, 2, 3, 4. 4 for the higher highs. And we got 1, 2, 3, 4 for the higher lows. Y'all set me up. Okay. We'll keep it moving. All right. So since we're expecting price to continue going up, the point, all right, cool. The point that we were looking at, we want to see a continuation pattern show up at a higher low. All right. We want price to continue going up. So the pattern needs to show up in the place right before it goes up. So that's going to be right here at the higher low. All right. The continuation pattern has to show up there. So let me go ahead and give you a Forex. You can type this in Google. This is information that just is out there. You can look for Forex continuation pattern cheat sheet. You could type that in. And these are just going to be some of the some of the patterns that we see a lot. All right? These show up often. And share. All right. These are 6 patterns that they show up. All right. We're going to go back to the chart and we're going to see if we can find 2 or 3 of these. So when these patterns show up, they are pretty much saying, hey, I am likely to continue going up. You're going to wait for confirmations, but just for the sake of this conversation, we're like, when we see this sort of thing, we can be looking for buys. Now, look at this first one, right? This is called a bullish flag pattern. Does this look familiar to you? Let me know. Let me know if just by taking a glance at maybe 1, 2, and 3, do these look familiar in a way to what I would have just shown you as that pattern that shows up all the time, that ABCD pattern. Yeah. And if they do, you would be correct, right? But can you also see that there's something slightly different about each of these? All right, there's something slightly different about them. The first one, this is a bullish flag. The second one, it's a bullish pennant. Like, look at what the purple things are doing. All right, look at what the purple things are doing. This bullish flag, as prices coming down in this area, it seems kind of even, right? You can tell that these purple lines, they seem to be evenly spaced. For the bullish pennant, the purple lines, they seem to have they started big, but then they start to taper down. Kind of like those, if you have watched any movies and you see these students at college, they have these triangle shaped flags, right? They're called pennants, but that's the kind of shape that we're seeing here. And now this bullish falling wedge, it's similar to the bullish flag, just that there's this pennant shape as price is going down. This situation right here, price seems to be going more sideways. All right. So these are 3 patterns that we can look for when we're looking for buys. If we see this type of movement happening, we can be prepared for this probably going to buy. All right. Let me I'm going to drop the link in the chat just in case you guys are on a computer. You could go ahead, pull that up, pull it up on your phone, print it off, whatever you need to do. All right, so let's head over to the charts. All right, let me see. How can I get these on the screen at the same time? Okay, let's try this. All right, guys, let me know on your devices what you're looking at. Are you still able to actually, yeah, let me just zoom in a bit. We're gonna do one pattern at a time. All right, can you guys still clearly see the bullish flag pattern example on the left? Yes, perfecto. All right, we're gonna go take a look, see if we can find this pattern in the wild. All right, so we are looking for, let me actually draw it. Well, you can see what we're doing. We want price to be looking like it's evenly spaced as it's coming down. Overall, it's going up, but we need it to look like it's evenly spaced before it goes back up again. Doesn't have to be perfect, but if we see something, then we could definitely point that out. Well, actually, we're going to look for some areas and then we're going to take a look and see which one it probably is. All right. So we are going to look, we're looking between this point right here all the way up here. All right. Price is definitely going up. But let's see if we can identify any of these patterns. Where's the thing? All right. So price came up to here, came down here, went back up again. So if that's the case, we're going to take a look at these candlesticks here in the middle and see what kind of shape we end up with. Now, what we're going to do here, we're going to go all the way back to primary school when we had those dot-to-dot books, and we are going to draw a line, right, that connects the top of these wicks. All right, so we're going to do that. Then we're going to come down at the bottom, and we're going to try to connect as many of those wicks as possible. We don't need to get all of them. That doesn't need to be perfect. You don't get any points from the market from how pretty your charts are. All right. So we have this. All right. Price came up, came back down, and then it continued going up. Let me make these lines a little more bold. And then we're going to answer some questions real quick. So, based on what you see on the screen right now, right? Which of the three patterns does this one look most like? Does it look like a bullish flag, a bullish pennant, or a bullish falling wedge? Jeez, oh my goodness. All right, which one do you think? This one, does this look like the bullish flag, the bullish pennant, or the bullish falling wedge to you? All right, we got one for the flag. I'll take two more answers. What do you guys see? Flag. All right, perfect. That's a flag. All right, next week we'll probably go into how we would take a bite, but right now we just want to identify. All right, so we got a bullish flag. Here we go. So now this one is the first part. Price came back down and it continued going up. All right, we got this. So let's see what this section here looks like. We're going to do the same thing. All right, a little dot to dot situation. All right. What about this one now? The second one. Flag, pennant, or wedge? All right. Flag again. All right. We'll see. Ah, jeez, come on. Yeah, and it's gonna feel a little monotonous, but the more you guys see this and you can see it immediately, the quicker you can see it, the faster you'll be able to make a decision when you guys are in these markets on your own. All right, so let's go again. All right, we had price come up, come down, up again. All right, we're gonna look in this area. All right, so we have that part there. We got this right here. All right, price came up, continue going up. What did we say here? What do you think this is? Flag, pennant, wedge. All right, absolutely. This is a flag as well. Now, here's the deal. This flag, it's not like what we have over here. This one seems very, very horizontal. Would you agree? This is very horizontal. These ones, it comes down a bit. However, all right. However, it's still because of the evenness of price in between there. That's how you determine whether it's a flag, a pennant, or a wedge. I really want to find you guys one of these other ones, though. I want to find a pennant, but price has been doing some rather even stuff. Let's see. Okay, cool. We got something here. All right, we got price come out, come down, go up again. All right. So let's see. Let's draw this up. Price came here, and then it came from this low point, and then we got this. If we try to connect as many wicks as possible, we would end up with something like this. So now we have this kind of shape. What do we have here? All right. Do we have a flag, a pennant, or a wedge? Flag, pennant, or wedge? All right. All right. So remember, take a look at the cheat sheet. The wedge, the arrow, the triangle shape of it is going to be pointing down a lot more, right? The wedge is a lot like the flag in that sense that it tries to point down. The pennant, it kind of goes more across. But I want you to look at the shape right here. All right. Now, let me just stop here a second so we can draw this without all these candlesticks in the way. All right. So with the pennant, actually, remember I mentioned with the pattern, right? If you have a trend, it's going to be a series of higher highs and higher lows. All right. With the pennant, in the flag of the pennant, right? In that space in the middle, you are going to get lower highs and higher lows. So it's going to look like this. Price comes up, comes down. We got a low. We got a lower high. We got a higher low. Lower high, higher low. Lower high, higher low. Then price kind of just moves. This is that feeling of, this is that wedge feeling, right? Where what in reality is happening, price is kind of like acting like a spring, right? So price came up, but then it starts to contract, and then it contracts some more, and then it contracts some more. And you know what happens when you push down a spring. As soon as you let that thing go, it just shoots up in the air. This is the structure now of this pennant, right? You're going to have lower highs and higher lows showing up. It's easy for us to see this when we're looking at it retrospectively, when we're looking at the past. But if you're actually trading, this could feel a little difficult. Okay. We're not going to get into how we would trade it as yet. We could do that a bit later when we have a better understanding of being able to find and identify these patterns. But this is really the structure of a bullish pennant. You're going to get lower highs and higher lows before price kind of takes off. Question for everyone on the call. Do you have access to TradingView? Do you have one of those free TradingView accounts? Yes. All right. Here's the deal. Once you get on there on TradingView, all right, Tian, you want to get on TradingView. This is where you can practice, right? If you want to learn these skills for real, you're going to be practicing on TradingView, right? Where if you go on there, everything seems crazy and confusing. That's where you can come back into the community and ask a question. Be like, hey, I'm on TradingView. I'm trying to draw my continuation patterns. What tools can I use, right? I could definitely help you with that. So if you were looking for the tool that I use to have this continuous arrow going on, you're going to look on TradingView. You're going to come in your palette here on the left, and it's going to be 1, 2, 3, 4, 5, right? 5 icons down. It's most likely going to be on brushes at first, but 5 icons down, and then look for path. That is going to be the tool that you want to use. That's going to allow you to just draw this shape on the chart. If you want to draw the lines, however, like what I was doing to indicate what the flag is, whether it's a wedge, a flag, or a pennant, then this is called a trend line. So that's going to be one icon down, and right here in lines, it's going to say trend line. All right. Those two tools, you will be at least be able to start your journey of looking for things in the market. And then what you do, whether it's, let's say it's on the weekend, you can come on any chart. I would suggest the 15-minute or the 5-minute time frame. You're able to come on these charts and just see if you can find some patterns. Right? The easier it becomes for you to find these patterns, the easier it's going to become when you're in the actual market trying to place trades. You will know, okay, I know what I'm looking for. All right, so I don't know if I'm going to find a falling wedge, but I'll just show some more patterns. And then we're going to look on the bearish side a little bit. Actually, I'm going to keep it on the bullish, and we're going to connect dots from what we talked about last week. So price came up here. We connect as many of these wicks as we can. And then here we connect those wicks as well. All right. So for this, we're getting those lower highs. But in this scenario, we didn't necessarily get the higher lows, right? It was pretty much even. But just like how we found a bullish flag pattern that looked really flat, right? We saw this earlier. Price in reality in the markets doesn't give us pretty things all the time, right? Some of the times they're not going to look like exactly what we look like. So we got to take our time with it. And the flag patterns, if you start to notice, like I wouldn't necessarily try to force this on this time frame as a flag or not, because I need to be able to draw this up and down movement, right? There's not much information here for me to do that. So on this time frame, I wouldn't consider this as a flag. It is a flag, but just on this time frame for us trying to get a better understanding, you want to see more of this price action happening. So I'll pause here for a second. Let me know if so far this seems pretty clear. If it is, you can drop an AC in the chat. If you feel lost, put an NC for not clear. AC or NC? All right, fantastic. All right, so let me just check back last week. All right, so last week we looked at the types of candlesticks, and I also showed you that pattern that shows up all the time. What I'm going to do now, we're going to connect some dots here, right? Something that we can start to use just about immediately. So what we have here, this pattern, right? A, B, C, D. We know we want to buy at C. We know we want to buy at the low, at the higher low, right? Whenever that shows up. Now we have a little bit more information. For this lower, for this higher low to show up, there's a pattern that's also going to show up at the same time. All right. So let me do this on paper first. We are going to look for times where price pushes up, creates an impulse, and a flag starts to form. All right, so we're going to be looking, since we saw a lot more bullish flags, we're going to use a bullish flag as our case study, right? So price pushes up. This down here is A. This up here is B. We're looking for price to go to C. Well, C. And somewhere over here is going to be D. So price comes up here and starts to do this. All right. Now, if we notice that this is happening, you're going to be like, oh my gosh, we did this with Kurt on Monday. This looks like a bullish flag pattern forming. But how do I know, right? How do I know when I should be moving? When should I take this trade? When is C going to show up? Okay. Those are all great questions. So what I'm going to tell you now is the structure of the movement of price is, yes, it is based on this pattern. Every time you see a pattern form on a time frame, the structure of a trend shows up on a lower time frame. All right, let me see if I can make that make sense. So from A to B, the same way we have my yellow line that did this up and down situation here. From A to B, that is also happening. And then from C to D, that is going to continue happening. Let me know if that's clear so far. A to B, as we're seeing it right now, just looks like a single purple line. B to C, I have it on the screen looking like there's a lot of up and down movement happening. I just want to be clear that everyone knows this up and down movement is also happening between A and B, and it's going to continue happening for C to D. Right, cool. Now, when A to B happens, right, that is telling us price is going up. So this is a bullish trend. From A to B is going to look like this, right? Whoops. A to B looks like this. When B happens and it started to come down towards C, the principle I want you to have is B going to C is only going to happen when A to B stops happening. When this uptrend stops happening, the downtrend from B to C is going to start. A sell will only start when a buy ends. All right? It's just like gravity. If you throw a ball into the air, it's going to be going up. At some point, based on the amount of force that you have and strength that you have, at some point, it's going to stop going up. As soon as it stops going up, we know it starts coming down. Let me know if you're following me there. All right. I know it sounds obvious when I'm saying it, but it may not feel that way when you're looking in the market. Okay? If we are waiting on C and B to C, price is selling, price is going down. While we're trying to figure out where C is going to show up, we are waiting for price to stop selling and stop going down. We're going to look on a lower time frame. All right. It's going to make more sense when I find this on the chart and we start to dive in. All right. So B to C, price is selling. At C, we needed to stop selling and stop going down. Now, what I need to make sure that you guys understand is, can someone tell me in the chat, what is the structure of an uptrend? An uptrend is a series of something and something else. Uptrend. A series of something and something else. You could type that in the chat. All right, higher highs and higher lows. Awesome. And then the downtrend is going to be a series of lower lows and lower highs. All right. Lower lows and lower highs. All right. Cool. So I need us to keep these things together. If we are looking at a bullish flag pattern, okay? This part of the flag pattern that we call the flag, that is a downtrend. All right. The area that we call the flag, that is the downtrend. So we are going to place our buy when we are sure the downtrend has ended. Cool. How do we know when a downtrend ends? Let's go with this. This is a high. This is a low. This is a lower high. This is a lower low. As soon as we stop getting lower lows, all right? All right, let me back up a bit. In a downtrend, the lower lows are the thing that you have to look for. In a downtrend, you want to make sure that lower lows show up. If you continue to get lower lows, you're continuing to go down. All right. Now, in the event that you don't get a lower low, the moment that you get, let's stop here. The moment that you stop getting lower lows and this happens, you get a higher low. This is your first indication that this trend is slowing down. This trend is looking to end. So if you are in a flag pattern, I don't want you, if you think I'm moving too fast, let me slow down. Tell me to slow down. But if you're good with me, then I'm going to keep going unless someone says something. All right. Slow down. Alrighty. So anybody else need to slow down, or it's just Khadija, right? So Khadija, you are clear. Were you good on what I have here? All right. K needs to slow down as well. No worries. All right. So we know when we're looking at a bullish flag, the flag portion of this pattern is in a downtrend. And that downtrend is a series of lower lows and lower highs. All right. We are trying to get this part understood, right? This C part. Because C is where we want to place our buy. We are looking for the reasons why price is going to stop selling and stop going down. That is what we're looking for. So what I was explaining here is as long as you're getting those lower lows, right? Lower lows and lower highs, you're in a downtrend. But if you want to make sure, right? If you want to focus on one out of the two, the lower low is the most important part. Right? It's as if you're going downstairs. As long as your foot goes on a lower level, you're going to continue going downstairs. If at any point while you're going downstairs, you stop stepping on a lower step, you're no longer going down. All right. So the moment that you, instead of going down to the lower step, you stay both feet planted on the same step, I want you to consider that as a higher low. Is this making sense for you? Okay, Khadija, let me know. Awesome. So if you just stop on a staircase, you are not going up, right? If someone saw you standing on the staircase, they're going to be like, okay, you are either going to take a step and keep going down, or you're going to turn around and go back up. It's not, we don't know what you're doing. We just know that you're no longer moving. But you know that you were going downstairs and you stopped. This is a higher low. This is the first indicator. I believe it was a call last week that I gave the example of being in traffic, not in traffic. You're on a minor road and there's cars on a major road. When the car approaching you, the car to your right, approaching you, comes to that, right, the car is approaching you and they turn on the left indicator. You're not going to pull out just because you see the indicator, right? You need some more confirmations. So this higher low, that is our confirmation number one. Price might be looking to change direction. Confirmation number two is when we stop getting lower highs. So if price comes up here and instead of a lower high, we get now a higher high, that is our confirmation number two. All right. Because it's a downtrend as long as we're getting lower lows and lower highs. If we get anything else besides a lower low or a lower high, we are now looking at an uptrend. All right. But confirmation number one is this. Confirmation number two is this. Repeat that last part with second confirmation. Okay. I'm gonna give you the traffic scenario and let me know if this helps explain what I'm just saying. All right. So you are on a minor road. There's a car approaching from your right. You see that they turn on their indicator, right? You want to turn right, but you see a car is also coming from the right. Once that indicator comes on and you're not in a rush, once that indicator comes on, we usually wait. We usually wait to make sure that one, that cars that turned on their indicator, they start to slow down. If they're slowing down, we're going to start to say, all right, cool. This person looks like they're serious about turning. But with an indicator on and a car slowing down, Is that enough reason for you to pull out? What my instructor would tell me is wait for the car to commit to the turn. Confirmation number three, when you see that car starting to turn, then you're like, yeah, this person definitely has turned. I'm free to go. Does that make sense? Just from a driving scenario. They turn on the indicator, I will pause. They start to slow down, I'm going to get ready to go. They confirm that turn, I'm out of there. Do those three steps sound like it makes sense to be a safe driver? All right. This is how this is how we translate that to the chart. All right. All of this time within the flag pattern, when price is creating these lower lows and lower highs, that's the car approaching us. When it created a higher low instead of a lower low, price turned on its indicator, right? We are paying attention now, but we are not going to enter this trade because it could always create a lower high. If price goes ahead, creates a higher high, we're now like, all right, sweet, let's lock in. We have a higher high. Next thing that we're looking for to make sure that price has committed to this shift, committed to this turn, we need price to come down and give us another higher low. When we get that second higher low, right, that tells us price is committed. And around this area is where we would look to place that buy. All right. So when a flag is happening, we look for the first higher low. We enter on the second higher low. Now, I want you to take note of something here. These three blue notes that I have on the screen. I want you to just follow what those three notes look like. All right. So higher low, higher high, higher low. Does this look familiar? See this right here. When price was coming down, we were looking for this pattern to show back up. This pattern that I mentioned shows up every single time. And what's crazy about this right here, this is the indication for us to place our buy. But we were also, because we were looking at a bullish flag pattern, that bullish flag pattern is also this shape. Let me know, like, honestly, is anyone lost based on that last thing that I said? Or are you like, what? What is going on here? If you think that this is like Inception, hopefully you guys watched that movie Inception, then you are absolutely correct. Within this foreign exchange market, we have patterns inside of patterns inside of patterns, but it's always the same pattern. And we are always looking for the same thing. All right, cool. Let me change the color of this. Do you guys need me to stay with this line drawing on the screen, or do you want to see it on an actual chart? All right. All right, all right, all right, all right. Let me know where we are good. Are we good with up and when I mentioned those three confirmations? Generally as a class, are we good up to that point? All right. I want to get at least three people saying yes. Awesome. So We are trading the bullish flag pattern. All right. I'm just making the inside of this red. We're trading the bullish flag pattern. All right. We are clear that when we're inside of the flag, we're in between these purple lines, price is giving us lower lows and lower lows and lower highs. The reason why, going from A to B, that is a downtrend, right? That is a downtrend. We're getting lower lows and lower highs. But we want to know when C is going to show up. We want to know when this downtrend ends. The downtrend ends when we stop getting things that tell us it's in a downtrend. So the moment, instead of getting lower lows and lower highs, that we get a higher low instead of a lower low, that's confirmation number one. That's when we start to pay attention. We're like, okay, you look like you might stop. Confirmation number two is instead of a lower high, we get a higher high. Confirmation number three, this is when now we are very sure that price is changing direction. We have two higher lows. This second higher low, we would want to enter our trade at this point. And now the part that I just messed with your mind a little bit is when I mentioned that this lower high, this lower low to the higher high to the this higher low to the higher high to the higher low looks a lot like that pattern that we've been talking about this whole time, right? Which is this, which is still the A, B, C, D. And this A, B, C, D is pretty much a bullish flag, all right? Now, I don't want you to you don't have to completely understand the relationship between that pattern and that pattern being a bullish flag right now. You're going to get that in time. If you are good with the three confirmations before you place that buy, then we Gucci. All right, then we are good to go. All right, we're going to get that in time. Or when you replay this, it might probably click. All right, can I take this to a chart now? Let's see if we can find this in real life. Alrighty. Okay. Right there. So guys, one sec. All right. Let's go. Let's go right here now. All right. So I'm going to go back in time and we're going to look at this particular flag right here. All right. We're going to be in between these two green lines. All right. So this is, for the sake of this conversation, I'm gonna call this A. All right, we are at A, and we are looking to see, this seems to be B. All right, so this is B right here. Now we know that price has been going up, so we're in an uptrend, but we're looking to see if we can find C, right? We're looking for C. So far, we have the beginning. A, B. C is going to be somewhere over here. So we're going to be watching price to see if we get those. Remember, B to C is a downtrend, so we're looking for those lower lows and those lower highs. All right. Let's see. All right, let me back up a bit. Let me back up, back up. All right. So in reality, if we were trading this, we started on the 15-minute, but we will probably go down to the 5 just so we can see what price is really doing. So we're going to do that. And this should allow us to see that up and down movement a lot clearer. All right, so B is going to be the highest point right about there. So if we stopped at this point, we would be like, all right, cool. Maybe this is C, all right? Because we don't know. We don't know where price is going to stop at this point. So we're just taking our time and marking it as it goes. It's moving too slow. All right. When we see that price creates a lower point than what we were thinking, then we're going to be like, all right, cool. Maybe this is C. And when it looks like price um goes up and gives us something that may significantly feel like a lower high, right? Because we are looking for those lower lows and lower highs. This was the last high. So we need price to come down. This does not feel like significant enough to be a high. All right. So for us, we're thinking, all right, this is probably going to be a lower high. If this is a lower high, that means that this was well, this is the first one, so this will just be a low. We have a low, we have a lower high. We're going to hope that we get a lower low. All right, that's what we're looking for. We're either going to get a lower low or price is going to give us a higher low. Okay. We're just waiting to see which one we get. If we get a lower low, then we know that we don't have that first indication. We don't have that first indicator. Let's keep going. All right. So this was a low, this was a lower high. This turned out to be a higher low, right? This ended up being a higher low instead of us getting a lower low. Um, the reason I'm pausing is to figure out, to see what was happening here and get a real indication of where the low could have shown up. I don't know if I can show you that right now because it's more of a like an intermediate advanced type thing, right? Um, so I can show you, but explaining it is going to take us into a whole different place, and that could confuse you a bit more. So right now we just following what price is doing, just so we can see if we can. Yeah, we just following price right now, right? We're not trying to predict it. We just following right now. All right, so we got a higher low, right? That is our confirmation number one. So these are red. All right, it's confirmation number one. Put it out there. You can try it. Okay. All right. All right. So as price is moving like this, right? There's always something between A and B that gives us an indication of where C can show up, right? There are clues between A and B. One of those clues is going to be something called let's type this up. We is we got engulfing candles. We have things called order blocks. We have something called imbalance. Um, Too small. Right? These are just three of the things that could show up between A and B that give us an idea where C could turn up. This is gonna be better for the recording, so we'll go through a little quicker so we're not going crazy on time. All right. Imbalance. Imbalance looks a lot like it always occurs between three candles. Okay. Usually candles next to each other, all right, let me say it like this. Imbalance shows up when you got one, two, three candles, and you see this vertical part of the candle. When there's the space between the vertical part of, which is called the wick, when there's a space between the wick of the first candle and the third candle, that is imbalance. So from here to here, we would consider that imbalance. Let's see. Right? One, two, three. That's imbalance right there. All right. When imbalance shows up, the market always tries to rebalance itself. How can I explain that? Yeah, for now, just take me at my word. Whenever imbalance shows up, the market is going to try to rebalance itself. So when you guys elevate to an intermediate trader, when you start to see things like imbalance, we're going to see that as a target. So at B, price is way above this area of imbalance because we know that it's going to try to rebalance itself. It's going to try to fill this gap that was created. It's going to come back down. So this area of imbalance becomes a target. It's like a signal to us. This is where price is probably going to come down to. All right. Let me know if that part is clear. Like just the explanation of what imbalance is and kind of like why price comes back there. The market is always trying to be in balance, in sync, without these gaps. So that's imbalance. One of the other things that shows up is an engulfing candle. Engulfing candle is when you got a small candle next to a really, really big candle, right? Like this purple one and this green one. That is an engulfing candle, all right? These show up to show us momentum in the market. This is where a lot of money entered the market, all right? And if you remember me talking about the what is on this chart, everything on the right-hand side, that is a change of price. So anytime the price, the value, the relationship between one currency and the other changes very, very quickly, you may have an imbalance, right? And that is going to show up by this engulfing candle. It's giving us a strong indication price wants to go in whatever direction the engulfing candle was going. So this is engulfing candle. This one here is engulfing candle. When you find things like engulfing candles, you would also draw a box, right? And let that box tell you, all right, this is an area that I could pay attention to. Okay. So imbalances and engulfing candles, those are indications on the A to B side of the chart that tell us this is where we can look. So that when we're trying to find C, we will always look in the past over here. Because remember, when I told you about technical analysis, this is future movements based on past data. So this stuff back here, the scenario, the example I like to give is imagine this imbalance. Treat this like childhood trauma. Treat this like that toxic relationship that you had that you didn't get over as yet, right? Those are imbalances. Those are things that if you do therapy, you would revisit those things. When you revisit, you fill that hole, right? You go back, you address it, and you're able to grow from that point so that it's not something that drags you down somewhere later in life. Does that make sense? All right, cool. So anytime price is shooting in any direction, if it just goes up, let me see if it go. All right, let me see if that looks different on in 1 hour. All right, so I need to sidestep a little bit, and I think I'm going to just keep it here and try to wrap up by 8:30. But right now on this chart, right, we're looking at the 1 hour time frame. A few minutes ago, we were on the 5 minute time frame. Okay. On this 5 minute time frame, you can see there's lots of purple and green candles going from A to B. When we go on the 1 hour time frame, A to B is made up completely of green candles. You guys seeing that? A to B is completely green candles. When you're seeing a lot of the same color candle in one direction, that is an indication of there could be imbalance there. On one of these lower time frames, there could be imbalance there because that looks like you've just been going, right? You've just been going up, 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 up. The market never only goes in one direction, right? And that's why this imbalance thing shows up. All right. Anytime you see the market going in one direction more than the other, there's some sort of trauma. Something happened. There's some sort of gap. There's something missing in those lower time frames that needs to be addressed. And because that showed up, and because you realize that it showed up, you're going to you're going to go on the different time frames and look to see if you can find where is this imbalance or where is the engulfing candle. Okay. The engulfing candle is like, I want you to imagine the engulfing candle as a core memory. So again, if we're talking about childhood trauma, the engulfing candle is telling you at this moment, right? At this moment right here, when you were six, specifically when you were six, this thing happened. What goes up must come down. Yeah, right? But the engulfing candles tell us specific moments in time where something, I don't want to use the word trauma all the time, but when something happened. So this could be good. Since price is going up, let's imagine that these engulfing candles are core memories in life when we did fantastic stuff, right? You aced your exams. You won your first race, like hurdles or something, right? Every time these engulfing candles show up, it's a core memory, right? But because that core memory was so great, you continue doing more stuff. So you joined a track club, you start training for regional games like not Carifesta, Carifta, and all these other things. But you never stopped to really pay attention to what was happening. You didn't stop and say, "Oh man, let me just take a moment and sit with the fact that I'm really good at track." Right? Instead of sitting in it, you just keep going, 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 going. Because you kept going and you didn't allow yourself to sit in that and really, really embrace it and really be present in what happened, that created the imbalance. And that core memory or the imbalance are now areas that um you're going to have to come back and deal with at some point, right? That could be at B, you got injured, right? And why did you get injured? Because you just kept going and going. You at every single trap meet. You haven't been stretching. You haven't been doing. Sorry. Okay. Oh, okay. Age was saying you're doing too much. I thought you wanted me
No,
to
I
slow
link
down, but
your
I see what you mean.
story. I linking it with your story. Like I going with it.
Okay, got you.
You don't have to slow down. Just saying in your story, you're doing too much, so you slow down. That's you mean.
Yeah.
Yeah, just to let you know you understand. Yes.
All right, perfect. So that is exactly what we're looking for, right? So C, we need to find the core memory so that we know we have an idea of where we might fall back to when we hit a ceiling in our life. Anywho, so if we knew that, right? We got this engulfing candle here, which pointed out this area here. We wouldn't have been surprised when this candle did not drop all the way down here, right? Because this was a level that we were expecting price could react to, and it did. It went up, came back down. This one was actually higher than this one, so this could have been our first higher low. So this would have been indication number one. Let's make that blue. Price pushed up here. And this high, I guess we're only 5 minutes, so things are a little bit different. So this is probably a high, so that this would then be that higher high that we were looking for before. Or even if we consider this a higher low, a lower high, we got our second higher low here. And the interesting thing about this second higher low is look at this, right? Right here, we had another area of imbalance. We got our higher low. So if we enter the trade here, we would have been in there. Oops. Let's see how that played out. All right. So that that essentially is what how we could have ended up trading this. Now, this price action didn't give us a nice flag. It gave us a flag, but you would have to had a bit more experience to really capitalize on it, right? We didn't get a lot of up and down inside of the flag. We kind of got this. It kind of came up here, came back down, kind of came up here, came back down, right? It's not clear. Now, I would encourage you guys trade what is clear, and if it doesn't seem clear, just leave it out, right? Just leave it out. So this is how we would have traded this potentially. All right, so I will stop here. You're gonna have the recording, but let me know if you feel like you gained something and you didn't really blow up brain cell trying to catch up, right?